Morning, everybody. It is time to get started on our class and welcome out. It's Friday morning here in Seattle and it is noon back on the East Coast. So wherever you're at, good morning, good afternoon, if that's what it takes to make you happy and relevant. Good for you on the East Coast. How you doing, Charles? Good to see you, buddy. My friends, Brenda, Helen, nice to see all of you. Good morning. Let me Well, actually, you can tell me if you're seeing the screen. I need to know if you're seeing the disclaimer on the screen. I can't quite see. Yes. Okay, this is good. All righty. Well, then the disclaimer is something should be familiar with you. I will just review it quickly. The point of the disclaimer is to remind you that there is risk in trading. There is risk in interpreting what a coach that's trying to give you education is telling you. If you think that they're giving you a wink and a nod and an advice on a specific trade, because they're not, I'm not, we're not. And this is education, it's training. We will be looking at specific stocks today and analyzing their position and potential and targets, etc. But it is not to be construed as advice in any way, shape, or form. Okay? Essentially, that's it. Yeah, Lee, I think so. So I'm going to go ahead and I know you guys saw it there for a minute and then it kind of disappeared. No problem. We're going to switch over to this one. All right. And I actually don't want that on that page. Give me a second. I'm going to shift this real quick. Dear. Come on. I moved the presentation. I shoved it out of the way over onto my big screen. I mean, I'm talking about big, big, big screen. And I can't seem to grab it and pull it back onto the screen to where I've got to control the. Let's see if we can do it this way. That might work. Well, maybe not. Let's try this and go from the beginning. Sorry, guys. I normally am not this incompetent, but let's see the view. There we go. There we go. Finally killed that. Make sure I'm still on with you guys. I am. All right. Now. Okay. So now if you can give me a, let's see, display. Control is in the way. No, it's a good thing we're amongst friends. Although, if there's somebody that's new here, they're going, who is this guy? He's a dolt. Yeah, I get it. I get it. Maybe that works. All right. So let's go to screen sharing. And you're looking at the full screen right there. Okay, so tell me now if you're looking at the full screen. It says Trading Coaches Playbook. Now I've got the controls where I can, yeah. Okay, great. All right. Okay, so guys, today our subject matter is, there's our good buddy Trip. Hope things are going well with you, my friend. Listen with your eyes. Okay. And this is going to be a charting class, and it is going to focus on some of my favorite important stuff, things that I want to feel like I've communicated to people that really want to know um, what I can teach you about charting, what I can teach you about trading images, trading patterns, trading. Um, well, patterns is really what it is. But the play on words with "listen with your eyes" is that the assumption is that the stock, the market, the index, whatever it is you're looking at playing, um, whatever you're looking at playing, there's a story. And that story is usually visual. In fact, it's almost always visual, but there's a story. So the market's trying to tell you something, but it's trying to do it in sign language. It's trying to do it in pictures. Okay. So I have several friends that are hearing impaired and they do ASL, sign language thing. I've learned a few things. I'm not very good by any stretch, but um, Brenda says, where's your face? So I guess on your list of your images there, you can have my face on there. There you go. If that's a big deal, you got it. Um, but they talk just fine, but you have to listen with your eyes. I mean, they're talking to you. They're telling you, and they even move their mouths. And if you're good at lip reading, you can understand what they're saying. But it's not going to come through your ears. It's going to come through your eyes. And the market is kind of the same way. There's absolutely something going on here, and it's trying to tell you a story, but it can't talk to you. It's going to do it in visually. It's going to do it in images. Okay. Now, is there exceptions? Certainly. I thought about this, and I'll give you an example um, later on. But in general, this is the subject. This is the point. Okay. All right. So here's something that I want to go over with you. I've shown this before. Maybe most of you have seen this, but I'll tell you what, I've never seen anything that is important that doesn't bear repetition. Repetition is the mother of skill. And when you hear something over and over again, there is definitely a process of trying to retain it. And retaining is a process of repetition. It takes 5 to 7 times over the same material, each time having an aha experience before you hold on to it, before it becomes integrated. That's just the reality, my friends. That is a proven methodology in the educational model. It takes 5 to 7 times of having an aha experience. Aha, I get it. Yeah. Okay, you say that, but truth is, we're going to be going over this a few more times before it internalizes. So it used to bother me to go over things because I say, well, people get bored. They heard me say that before. And I would be reminded by wise people around me, look, they may have heard it before. And by the way, don't you enjoy going over things that you've enjoyed and you learn from a second time, third, fourth, fifth time? Well, of course I do. In fact, I learned more after the fourth or fifth time than I got on the first time. Okay, well then quit complaining. Just teach. They'll like it. All right. All right. There is a story, a generalized story that involves how players move in the markets. And there is such a thing as players. I know this from two bases. One is I was taught this by a very famous market personality, trader, market maker, uh, celebrity on CNBC, their own shows on TV, etc. Okay, they taught me this. I believe them. Number two, I've seen evidence mount that this is true over and over and over again. So I believe the source, it made sense, and I have observed it over many years, and I have not seen anything to say this is not accurate. So let me paint a picture first, because when you're looking at pictures, when you're looking at a chart, you are looking at the behavior of the people trading that chart. Granted, more and more behavior is being influenced by artificial intelligence, by high speed trading, HFTs. And yes, that's true. But there's still individuals, it's still people behind those trades. Patterns still happen. A lot of times they happen faster, but it doesn't mean that there's anything wrong with the concept of the patterning or the interpretation of the pattern. It just can go more fluid, faster, and it can have some new twists that you have to now learn and add into your body of knowledge, but it's still people. So here's the psychology behind major market moves. And you need to understand this, because if you don't, you'll make some assumptions and you'll get frustrated about things that you really have no reason to get frustrated about, because they're completely out of your control. The only reason you may be frustrated is because you feel out of control or you don't understand. Okay. So, they say that half of the solution of a problem is acknowledging or defining the problem. Once you define the problem, they say half the solution is done. You haven't done anything. Well, sure you have. You've defined the problem. All right. So once you understand this, it'll be easier for you to just let it happen and not worry about things that you can't control or you don't understand. All right, here we go. A traders. A traders are not that. Come on, hit the annotate button. Oh, all right. Move the controls onto a different screen. All right, let's do that. All right, so pen now. Don't. It says I do. No way. All right. Okay. So this is going to give me a little bit of a challenge here, but I can do this. No problem. Let's do this. Okay. You see, there's our A traders right there. Here's our B traders right here. Here's our C traders right here. And here's our D traders right here. Okay. Now, A traders, B traders, D traders. What are we talking about? And I don't know. Can you see? I was drawing on the page, and this is acting a little bit strange. I'm going to. All right. Did everybody see me draw that red line right there? Ah, okay, okay. Now I get it. Okay. All right. We have A traders, B traders, C traders, and D traders. A traders are the alpha traders. They are the lead dog, the head of the pack. They are the most influential traders in a particular stock index or even larger, but they are the alpha traders. They tend to be male, although that's not as closed of a club as it used to be. Now there are some alphas that are computer programs, AIs, that are moving into that position. But essentially, an alpha trader is somebody, or in some cases, a small group of somebodies who have figured out how to play a particular stock market or index. They have got it so dialed in that they understand how it works. They understand the psychology of the people who play it, all the players. They understand the industry. They understand the nuances of things that could be seasonally driven or event driven, like earnings. Season meaning summertime, holiday time, fall, whatever. They understand the implications of the world of markets, and they rise to the top organically, all by themselves. They become the most effective traders in that stock. Okay. You don't get a sign. You don't beat anybody out by, getting voted. You just are. Most of the time, they're somewhat invisible. Most of the time, people playing that market stock or index don't even know who they are. But they, my friends, show up here. Come on, don't do this to me. There we go. They show up here. Come on. Pen. There we go. They show up here. They show up here. They show up here. They show up right here in these points. They show up here. They show up here. Okay. What do these locations mean? Why are these locations significant? These locations are significant because they are at turning points and they are ahead of the turning points. You understand? They're ahead of the turning points. Just before this stock turns and rockets to the upside, okay, just before it takes off to the upside, something happens. And these A traders are involved in that something. They are the ones who are influencing or pushing the activity, the buying activity here. Now, because they're showing up just prior to this, their action might be, okay, their action might be to sell. They might come in here and sell. And if they sell, and these are the players that are big, they have large funds behind them, large trading power behind them, large leverage. And if they sell and the market does not want to sell anymore, then they turn around and they will buy like crazy and they will cause a bounce. Okay. They can literally change the direction of that market in one day, either up or down. They've got enough clout to do that, to move it. They can move the needle. The B traders are pros. They're also professional traders. They are not the alphas, but they follow very closely, either by knowing who the alphas are or watching them on the screen. And they are all in a position where they would like to be alphas, but they know they're not. And if they're smart B traders, they will follow the lead on the alphas. So if the Bs come in, they come in here when they see the alphas making a strong move. They come in afterwards. So here comes the trading buying pressure from the Bs. Now between the A's and the B's, you got the pros and the alphas moving. Now, after a day or so, you will start to get the public. Okay. Now the public starts to come in. These are trading accounts that are managed, and there's other professionals who are waiting. They're kind of slower on the uptake, or there start to be individuals. And finally, you get the stragglers, which is the last. And these are usually individuals. These are individuals, people who hesitate, watch, and by the time they get in, so the C's will carry most of this right here. The D's come in when they are convinced that if they wait any longer, they're going to totally miss the party. We're afraid to get in because they missed it last time. But by gosh, this thing has been going and going and going. And if I don't get in now, I'm going to miss out. Well, that's kind of like the last contribution, because it takes a contribution, it takes activity to drive the markets. When the A's sense that the D traders are coming in, they will come in and they will maybe push. They'll try to reignite or to give a boost to what's already been a big run. And if they don't sense a bunch of C's and B's coming in, then they know that the D's are there and that's it, which means we're done. And so now the A traders will start to slam. They'll start to short the market. The B's come in. They go, okay, if you're in, we're in. Now the momentum kicks in and the C's go, oh my gosh, we got to get out. So the C's may have ridden up a big part of this. Some of them got a big part of the run. Some got just on the last little bit of it, but the C's get out and switch and go bearish. And the D's go, oh my gosh, I did it again. And last time I got out too soon. So they hold on, and they hold on, and they hold on. And as we get down here, the A's start to shift, the B's follow, the C's follow. And about here is where the D's jump off because they can't stand the pain and they swear, I'll never get in again. But by the time the market's up here again after another few weeks, they just can't help themselves. And here they go back in because now they're missing out again. And that fear of missing out just drives them crazy. This interaction between the A's, B's, and A, B, C's, and D traders was explained to me by someone who I trust and I believe, and I've seen this pattern happen over and over and over again. Do I know any A traders? No, I don't. Do I know some B's? Yeah, I've known B traders. I've known B traders who knew who the A traders were by name. It's kind of rare, but they did. I know that some A traders are sitting on a private boat in Sydney Harbor, and they climb in their helicopter after they've traded a few hours, and they fly up to the top of a hill where their hilltop mansion hangs out looking over top of the Sydney Harbor. And they spend part of the day, they're there for a while. A certain market opens up, they sit down at a computer up there, and while they're looking out over the harbor, they make a few trades. Then after a while, they jump in the helicopter, go back down onto the ship, and they may trade there, a different market somewhere else in the world. Or, I mean, that's the lifestyle of some A traders. Others are on Wall Street. Others are a group, a small pack that have forged an alliance. But there is such thing as A traders and B's and C's. And what my friends, I would suggest is that you make a goal to become a good little B trader. Be happy little B's. In other words, if you can learn to see the movements, if you can learn to recognize the patterns of support, resistance, characteristics of a particular stock when it hits these points, when it does it at a certain time of year, when it does it, et cetera, et cetera. You build, as I've told you, a dossier. You build a file on that stock so that you know what it does. Okay, there's your file. And here's the name of your stock. And you know what it does at Christmas time. And you know what it does when earnings come out. You know what its tendencies, its characteristics are. And you start to understand this dynamic. You don't have to meet the A's and the B's and the C's and the D's. You see them working. And your goal should be to try to tuck right in here with the other professionals who don't claim to be the alpha, but they're smart enough to recognize and follow the alpha moves. You're going to follow a pattern. Okay. And you've heard me say, if there's no pattern, there's no trade. All right. So there's the introduction. There's the premise. So, questions? Yeah, that's cool. We can learn patterns. We can learn all these kind of things, but does it work on my trade? This is something I want to touch on well, not super brief, but kind of briefly. And I want to teach you something here. I just saw an update on a very famous program, trading program, a very good one. I like it a lot as far as the trading software, or excuse me, charting software. And it had a really, really nice listing of most of the power indicators that I like. For example, MACD and things like that. And they were talking about certain strategies that sometimes those strategies had to do with trading around a specific day, like a holiday or earnings, etc. So you have this list of, here's a strategy. Here's a strategy, and they would list it out, and then there would be a paragraph or two explaining how you trade this strategy. And guys, I just want to caution you, there is so many people out there on the internet trying to give you great advice if you'll sign up for this or sign up for that. And it always is in a narrow perspective so that it makes sense or it looks good in their circumstance, right? But here's the thing. It's general. If you take any strategy that says, this is how you trade this is how you trade that, It's general. And what I saw that was, I always look for this. They were describing these strategies as good. These are good strategies. Just like with candlesticks, guys, what is my response when somebody says, oh, yeah, that's a good one? Ah, this is a good strategy. Oh, this is a good tool. What's my response? Anybody? Some of you should know. Type it in there. What's my response when somebody says, oh, this is a good strategy, or this is a good technical indicator? Tom says, why? Trip says, how do you know? Um, Somebody said compared to what, but their name disappeared off of there. So, yeah. So here's what I say. I say, really, starts with a question. How good is it? Specifically, how good? Well, really good. No, but what does that mean? How good? What's the percentage? Is it right 5 out of 10 times? Is it right 10 out of 10 times? Does that make a difference? Is it right on this stock? Is it right on this stock? Does it work on the S&P? You know, guys, really good, or this is a good one, doesn't mean squat. And this company had pages of all of these strategies laid out. This is how this works. This is a really good one. This is considered a really good indicator. And there was no application to what? On tech stocks? Does it work on IBM, for example? Does it work on Caterpillar? You know, does it work on commodities? Does it work on futures? Does it work on indexes? You know, those are the questions you have to ask, guys. Do not be a stooge. Do not think, well, they know more than I do, so I'm just going to swallow this. This is a simple question. It's a simple question. Really, how good is it? How good? And you watch fumbling, mumbling. You won't get good answers because they don't have a good answer. I got a great answer. I got a great answer. I can tell you exactly how good it is. But the process is you are going to have to do it yourself. Okay? You do it because it hasn't been done for you. Sorry, hasn't been done. Maybe AI will do it for us all. AI will do everything, right? Don't get me started. Good and bad. And it's like any technology, there's good and there's bad. But you do that. You build a dossier. You say, I'll look at this indicator, I'll apply it to this stock, and I'm going to go back over a year, 18 months, 2 years, and I'm going to see how good it is. How many times did it happen? How many times was it right? Is there any other characteristics about when it was right and when it didn't work? In other words, when it predicted accurately and when it didn't predict accurately. And you build a dossier. You build something that says, for Caterpillar, this one works 70% of the time. Okay, great. Great, great, great. But until you localize it, until you make it specific to a particular stock or index, it's worthless to you. It's worthless, completely worthless. And if somebody can't help you figure that out, they're not doing you much service. And that's just the way it is. No apology. That's just the way it works. So you've heard me say that patterns are important. And if there's no pattern, there's no trade. By definition, patterns are visual, although I said I would give you an example. Guys, if you hear things a certain way, you can develop a pattern based on what you hear. And could you hear about, well, you know, the market does this on Tuesdays, right? There's a Monday to Tuesday trading strategy that says that if the market finishes low on Monday, that you'll have a positive rebound on Tuesday. That's a market maxim. Is it a trading strategy? Yes. Is it a good one? I don't know. I've heard people say it's good. Yep. Have I observed it? I have. Is it a good trading strategy? I don't know. What are you going to trade? Well, the overall market. All right. Well, let's go back. What if something turns out, again, to be 70% accurate. Quit doing that. I'm getting the pen, stinking pen. If it's 70% accurate, that means it's 30% inaccurate. Okay. Yay, nay. What value is that? Well, that's a great question. Patterns are awesome. Are they tradable? Yes, but it depends. It always depends. Depends on what? Well, does it apply to that specific stock? We said you have to specify. Does it apply to my stock? Does it apply consistently? Well, 70%, that's pretty good. Yeah, 7 out of 10, which means 3 out of 10 it doesn't work. Correct. Okay. So what's the next one going to be? And your answer is, well, 70% chance that it'll be positive. That's pretty good. Okay, I agree. But there's 30% chance that it won't. Correct. Do you know which one is next? Is it going to be a positive or next? Which one's up next? Well, I don't know. You don't know. Okay, so that means that as Tripp and others were already going, I know where this is going. Guys, your odds are always 50-50. I don't care if it's 8 out of 10. That's 80%. But that also means that 20% of the time it's not going to work in the way it looked. The odds that the next one is going to be one of the 80% or one of the 20% is 50-50. Unless, right? Unless you have insider knowledge, insider trading knowledge. No. It's possible that you could look and you could say, well, I look at this pattern, and 80% of the time when it is at up here, or excuse me, 80% of the time when I get this signal, it moves to the downside. Okay, great. You got 80% accurate indicator. Yep. What happens if it happens right here at a topping point at a resistance level? Oh, you go back and you check your statistics, and that is 100%. And here it might be 70%. And so the whole thing comes out at an average of 80, but there may be specific locations or situations where you look back and it always happens that way. I haven't found that. It's possible. So I'm just saying your odds are always going to be 50-50. You could stretch and say, yeah, but on this stock, it's 100% over the last 4 years. Okay, then that's pretty impressive. Never seen one, but if that's true, I'd trade on it just out of that. Right? But when you go into this, you have recognized there's a 20% chance and you don't know which one it is. It could be the next one going the other way. So that means you always trade neutral. You always trade neutral. Yes, you're going to look at your pattern. Yes, you're going to find the trade based on the pattern. Yes, you're going to look at the dossier and see how accurate it is. And if it's good, that's great. So what does that mean? That means if you're starting this trade off of double bounce, because there's a good history of it, as you go in on this right here, you know exactly where you're going to get out. You know exactly where you're going to add to the trade. You know exactly where you're going to put your stop as it moves. You have a whole trading plan. You're still neutral because you've got your exit strategies right there. But because you've got a strong pattern, if it starts to materialize again, you may add to the trade. You may add to it again. You may have developed a strategy where you add twice to get your full position in. And you do it as it starts to manifest this pattern that you've come to recognize. Okay, that's great. But when you started, it's always 50-50. Always. That means you trade neutral with exit strategies. And you don't take it personal if it turns out and says, oh, sorry, this was one of the 20%ers. You don't throw a tantrum. You don't knock over the chip display on your way out of the 7-Eleven. You don't scream and yell at some little kid walking by or throw a rock at a bird just because you're mad. You don't do that. You went into this knowing that it could have gone either way and you were neutral. Yes, it was 80%, but this time it wasn't. It was one of the 20s. Okay, well then try it again. You have to trade neutral. I love this phrase. I was taught this, name dropper, by Steven Seagal, personally, sitting at his house, year 2000. Fun story. But he said, if you make any kind of a combat situation out of, if you make it about winning or losing, you're already dead. He said, if you do the right thing in each moment, the winning takes care of itself. And that's supposed to be winning, not willing. Good heavens, missed that. The winning will take care of itself. Great advice, by the way. Extremely good advice. Okay, now I told you we're halfway through. I want to, in this class, I invited you to bring stocks that you want to take a look at. And what we're going to do is we're going to go through and apply this process of finding patterns, seeing if there's patterns on particular stocks, answering any questions you have about how do you trade this stock. Now, I will answer what I want to answer, and if I don't want to answer it, I'll tell you. But the fact is that when we look at any particular stock you're trading, whether you see it or not, there's probably patterns there. There's probably things that I can help you see that you didn't see before. Once you start to see them, it will be better. It will arm you better to make good decisions in your trading about that, because you'll start to recognize that, wow, there is a pattern. Or you may be surprised to find out, I've been trading this thing for 3 months. There's no pattern. Ryan can't even find a pattern. Okay, well, then maybe we shouldn't be trading it. Mommy, it hurts when I do this. Well, quit doing that, right? So I don't know how this is going to work out, but I am going to invite you, as we switch gears here, to bring up any charts that you want to take a look at. And we'll go through and we'll see if we can find the pattern. Okay? Because there is almost always a pattern. If I were to say there's never a pattern, I don't think that would be true. But in my experience, there's always a pattern. Okay? All right, so we're going to shift the screen share, and you're going to give me a confirmation here if you see the charts up here now. Okay, and I'm trying to move this. There we go. I'll move this out of the way. Okay, there we go. Now I can see my full screen, and I think I'll move the camera out of the way as well. Okay, let's see. So we're going to scroll up here. The first ones, I got to write this down because they're coming in fast and fast. All right, the first one that I saw was Airbnb. Then we've got SPY, AMD, and Apple. Then we've got MS, NVIDIA. All right, let's see how far we can get through this list. See if there's any more. Charlie, if you can short-term trade with this, normally do directional trades. Charlie, which one are you talking about? Charlie, you said this. I don't know what this is. Give me a little bit of, or Charles, give me a little bit of more detail on that, please. Because I see this. Were you up here earlier? Yeah. Okay, Charles. By the time I get to you, you need to add more, or otherwise I'm not going to know what to do. All right, so we're going to go to Airbnb first. Well, first of all, why don't we look? There's the S&P. We'll do the SPY, but there's the S&P 500, which is the base plate for that, obviously. And you can see we're at an all-time high, and we've reached up to what? Well, we've pushed through. Actually, I do want to show you one thing right here. There's a principle that you can look for in trading, and you're going to see it, that it does have it has a function in the S&P 500. I mean, there is an input on this, and there is a feedback that will go through a lot of stocks as a result. If you go through right here and you measure this distance, which is the surge, okay, this run that went from March of 23 up to August of 23. This is in a weekly chart, I believe, here, so I'm showing a lot of time. But you see the height of that? Then we take that and we're going to grab this and we're going to take that surge. Well, I guess we're not. Thought I could drag that. You're going to take and you're going to compare it to this one. And there will be a habit amongst individual stocks, traders, as well as indexes, especially if they're correlated indexes and markets, where their runs will be similar. So this was a breakout above an all-time high. Okay. So what we do on that is we compare this run up to previous run ups to see if there's any correlation. Then there's another thing we do, and that is this. If you watch, I'm going to measure with an arrow where we went to the takeout the all-time high right there. There is a pattern, a tendency. Again, I'm giving you the 5,000 foot view, and then you need to specify it. But if you look at this, you'll see that there is a tendency to stack that. If you have a breakout to an all-time high, there'll be a tendency to make about the same size of move. It's almost always smaller because you've exhausted a lot of energy to get here and fight your way across that line. Now in exuberance, if a market's exuberant and they're really feeling their oats, they may push on to another level. But that that next level is almost always short of the first one, even if it's a big run. So if you get around 75 to 85% of the previous run that took you to the all-time high, you almost never see it run more than 60 to 80% of that before it collapses back down. Before somebody finally says, I'm not tempting fate any longer. I'm cashing in my chips. Me too, me too, me too. And you get a big correction. Okay. But when you take out an all-time high, if there's still energy and the A traders can sense that there's still buying pressure, they'll push hard. But my experience is that you look for around 60, 80% of that. And if you get that, great, but you typically don't get more than that. And before somebody says, I'm out, I'm taking profits. And then everybody else says, me too, me too. Okay. So we start with Airbnb. Okay. We go to a daily chart. Questions. So when I come up with your stock, I want you to have, if you have any questions, I want you to have those ready to go, pop them in so that I can address. So Stephanie, this is yours. What do you want to know about this? Do you have any questions or anything specific that you want to know about it? I don't want to take off on you if you were had something specific you want to address. Oh, Charles, I get your question now. That's a good question. Yeah, we'll cover that. All right. So Steph, I'm waiting for you. I can just take off if you want, but I really would like to know specifically why you want to trade this. Okay. So the first thing I'm going to do is I'm going to push back far enough to where I can see the whole trading history of this stock, or at least a couple of years. Well, it turns out this has only got a couple of years, right? It's got about 3 years on the books, and it started off with a bang. Airbnb is a big thing, and you can see that we had a little bit of falling out, and now it's trying to recover, trying to climb back out. A couple of things that I would note right off the bat was at the beginning, there was a pretty big price concentration right here around this $130 mark, right? 130 bucks. It opened about there. After racing all the way up here to 219, it came all the way back down to its opening price. Not uncommon. Rallied up, bounced down. Okay. Not the end of the world. Not an abnormal behavior, but we did come crashing down off the top like so. Had a nice double bounce. And when we rallied back up, we got up to almost, well, I'm going to show you. There's our closing high. And you can see that when we reached that closing high, that's all it could manage. It tickled that, and people said, and it might have been folks who held on too long. This is part of the ABC rotation. Some of the people who got out or who didn't get out quick enough on this top and they wound up losing money. As soon as we're back to the all-time closing high, you got people putting the brakes on going, I'm not gonna risk it. And if there's enough hesitancy, the A traders will start the shorts. And if everybody panics because they were anticipating this, boom, you get a quick correction. Real quick correction. Okay. Now I want you to see something here that I see as well. And that is, if I look at these tails, which this is compressed, let me go back to the daily chart and we'll go back in time. You can see this a little clearer. But I like when I'm doing macro checks on a background, I like looking at, if I can get this to come into play here. I like looking at in a weekly chart. It's a little easier to compress the data. Nah, heck with it. We'll go back to the weekly chart. So when we're doing a macro, it's easier to compress the data and see your imagery in a macro in a weekly chart because you can keep it in perspective. All right, you see this kind of wedge that we formed right in here? After the all-time high, we pulled back, we rallied back up, not quite as high, we pulled back a little higher, we traded into this wedge. When it broke, where's your target? Your target is all the way back to the start, and that's where it went. Rally back up, bounce, there's our downtrend coming in, double bounce, double bottom, break out of it, touch and go, and here we go, right back up to the compression point on the wedge, pull back, and then we make a mad dash, go up, ring the bell, everybody gets scared and runs away, comes back right where? Right here. No coincidence. You got a price action right here that's very important. Okay, you can see the significance of this. And get that line to snap straight. There we go. Okay, this is where they hesitated. They pulled back, come up, hit it from the bottom. If you can see this in a line chart, you can see exactly what's going on. Boom, 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 boom. Go below, come back up and hit it. Go below, come back up and hit it. Come back up and hit it. Double top. Oh, I'm getting tired of this. I can't make it through. Okay, so where do we go? We go down. Where? You can see we came right back to the 130. We came back down to the 130, stopped, and then punched through. There wasn't enough energy. A traders short it right there just to make sure that all the sellers are out, and they weren't. There was still more selling pressure, and so they push it through. Now, where do we go? We go down here to 90 bucks. Why? I don't know. I have no reason to understand why they went to 90 bucks. There may have been a reason. I have no idea. There's nothing to give me a reason yet. Visually, I can't tell anything about 90 bucks. Okay, except that we came off of it twice. And then where'd we go? Boom, right back up to our opening 130, played it again, got up on top of it, bounce, bounce, bounce. See, we're just playing ping pong around this 130. Rally up, bounce off the 130, and we head to our target, which is where? Up here at 170, 170 even-ish, 170, that's our line up there. And we just got here yesterday. Yay. So what's going on? Now we'll go to a daily chart. And if we compress things a little bit, there's our 90 bucks. Here's our current rally. And we're going to pick off of here, and we're going to double click on this line. We're going to run it up to the top of the first rotation of our pattern. And we're going to double click it again. These are called lanes on the freeway. And we're going to put another lane up here at the next failed rally. As long as this uptrend is in place, these will be the guiding angles of attack. Now you can see that this surge, again, this is what I was talking about with the S&P. That distance, that surge up this many points, this many points, this many points, this many points. It's the same number of vertical points. The support line is holding, defining the trend. The resistance lines are holding. They don't have to be perfect. Sometimes they're ridiculously perfect, but they don't have to be. The ones that's got to be good is the support on the downside. Now, if I double click on the lower side, I'm going to see one more thing, and that's I'm going to pull it up into this pullback right in here. So this first pullback, we had a gap, pull back in, and I see a lot of, if I look into a line chart, I see a lot of action right in here on this line too. So all this is doing is showing me, it's giving me an angle of attack on this trade, on this trend. I see one push, two push, three push, four push, five push. Oh my gosh, maybe even a sixth one. This is very abnormal. You usually have 3 to 5 times on a trend before it breaks down. And in this case, we've got a lot. Okay, depending on how you want to measure it, there's some long tooth in this, if you will. There's some durability in this, longer than normal. All right, so now I'm going to go back to a big picture, the weekly chart. So where is it? Is it at resistance? Well, back here, I would say no. I would say bigger resistance is going to be up here at about 175, 180, close to 180-ish. We're at 170 right now. So the potential for 10 more dollars before it tops out. Oh, that's interesting. We go back to a daily chart and shrink it down a little bit. And we say, what happens if this goes up 10 more points? Well, if we extend this line right up here, come on, there we go. And we extend this line over here up into the 180 mark. If we push across that line, it would make sense in the pattern, wouldn't it? You get up here around 180, you'd be topping out on the big pattern. You'd also be running into long-term horizontal historical resistance. Booyah. Okay. Now, when I do this, guys, I will throw a lot into the first trade, the first example, because everything is usually transferable. So the things you've seen me do, I'll do a little quicker on the next one, simply because I've shown you here. And if we take this much time on each one, you can't get through too many. And I want to get through a few more. Okay. Any questions on that, Stephanie? She says, thank you. You are very welcome. All right. SPY. Okay. So we go to a weekly and we go to a monthly and we go, wow, have we ever been this high before? Nope. We're on a roll, man. We are on a roll. All-time high. Yep. Go back to a monthly. Come a long ways. Come a long ways. Now, we're going to reduce this down a little bit, drop to a weekly, and say, what's the significance of where we're at right now? There's no significance without looking backwards. You have to have context. You have to have context. Where are we relative to where we come from? That's the only thing that gives you context, is where, so what, from where? All right, now we drop into a daily. And we see this last big run as we approach that previous all-time high. We hesitated, put on the brakes once, twice, three times, and then we came up and we tickled it through and we punched through. Yay. And now we're on an extension run. So let's run up a trend from our starting point in this long-term run. And we see that that doesn't look like it matches real close. And it doesn't. Now, there's a couple things you can do. You can try to back off and say, yeah, but is it still accurate? If we just kind of do a bigger, broader picture, does that work? So we double click the line and we come up and say, well, there's a significant point right there because we set off on a matching angle here. And that actually starts to lay in there pretty darn nice. And well, how about if we do it again? All right, and we lay this up there and go, oh, wow. Okay, so maybe those bottoms don't line up perfectly, but there's something going on here. There's absolutely something going on, at least I think, because what I'm seeing is those are the angles of attack that are being consistent. Now, if I look at this through, could we dial it in a little closer? And it looks to me like you can. But is this a clean classic where you, on an uptrend, you can define the support line like a frozen rope, like a straight perfect line. Most of the time you can, but in this case, I have to back off and say, well, there's something going on here. It looks to me like there's definitely something going on. Is it clear? Not as clear as I'd like. Okay, not as clear as I'd like. But is there an angle that of attack on this that appears pretty consistent? Yeah, there is. Now, one of the things you can do is you can take your regression tool, and you can take the regression tool, which is this right over here on the right. See, I'm highlighting it. And we take the regression tool and we grab a spot there and we just run it up. And we say, how close is that matching what we've just defined? And the answer is not very close. Not very close. Why? Well, there's a couple things that could be explaining this, guys. One, we've got a series of two big gaps. Okay, do we have gaps in the SPY? Well, looking at it in this context, yeah, we do. Okay, it has gaps. I'm going to show you something that sometimes people are accused of, and rightly so, of manipulating data, especially scientific data. The hockey stick thing on climate change drives me nuts, and it just still drives me nuts if people even talk about that. Because you cherry pick a point in the chart and you blow it up and you make a big deal about it. But when you look at it in the big picture, it doesn't mean what you're saying at all. So I'm going to be careful. But when you cherry pick data, you can change your starting point. What if I changed my starting point on the regression line and went here? That actually looks similar. What if we come up and started in here? So what I'm doing is deliberately breaking the rules. And if I go through this area right here, it starts to line up a little bit better. If I pull back, I could go, oh, see, it works there. And that's when you're cheating. That's the hockey stick crap that cherry picking data that drives me nuts. The point is, and what I've said before is, if there's no pattern, there's no trade. If the pattern's not there, don't force it. Okay, don't force it. If it's not there, it's not there. I'm looking at this saying, I can see a generalized angle of attack that looks pretty strong. Okay. I'm also seeing price movement here that looks different than it did back through last year. Okay. We had nice big swings. This was a real nice pattern. Time and distance were consistent on the swings. Up here, we're getting choppy, jumpy. Once we got past the all-time high, this is just on a spurt. It's on a burst here. To me, this is where I would bring in now the next evaluation that I showed you, and that is say, well, we went this far to climb through the all-time high. Okay. So how much is that? Well, you look down here and we go from 410 up to 480. Okay, so we have 70 points. Okay, so what if we apply that same principle now of what if you get 80% of your crossover? Okay, so in other words, if you had an 80-point run or a 70-point run to get here, and then you break through, chances are really small of you getting a 70-point run on the other side up into an all-time high. Usually you're going to get 60, 80% of that. Okay. So what would that be? That'd be about 60 points, 50 to 60 points. So if we're here at 480 and now we're up here at 522, we've picked up 22 points or 44 points, 42 points. Come on, Ryan. 42 points. Okay. And 42 points is about 60, 57, 58%, I think. So it's about 60%. So we're getting into an area where somewhere between here and, the top of this trading range would be up here around 535. So between 522 and let's even say 540, you're likely to run out of gas on this surge beyond the all-time high. It's just kind of the way it works. Okay, just kind of the way it works. All right, let's try another one. Let's try AMD. All right, AMD. Go back to a weekly chart, go back to a monthly chart, and say, okay, I'm satisfied that I'm not going to see AMD trading higher than that in the past. So drop back to a weekly for a big picture. There was a previous all-time high. Oh, wow, that's fun. Hey, this is fun. So here's our previous all-time high. And it took a while, but once we got back here, did it recognize it? Boy, howdy. Okay, there's your recognition. You come up, you punch through, you land on it once, twice, 3, 4, 5, and these are weeks, right? 1, 2, 3, 4, 5 weeks. 5, 6 weeks right here, pounding on this old resistance as new support. And then it launches up. Yay. And how high does it go? Well, we go up to about 28. We started through at 65 or 64. Okay. 63 points. We'll go back. Where did we start? We started at 95 and we punched out at 164. Okay. So that's 70 points. So we had a 70-point run to get here, and we managed to shoot all the way up here to about, what did we say? We went 35, so about 60 points. Okay. So at a 70-point run to get here, we hit 60 points on the top and then came crashing back down. Okay. So there we got up to about 95%, 95% of that run. Again, not an atypical pattern. So to zoom in on this and say, so how do we trade this now? Well, this starts to look more like what it normally does when you chart. And I look at that and go, wow, 1 rotation, 2 rotations, 3 rotations, 4. Patterns typically go 3 to 5 times and break down. Okay, let's take this up right here to the top. This is the first lane on the freeway, the top of the first rotation. Okay, go to a line chart. Wowie zowie, isn't that pretty? So then you say, well, let's go up to the next rotational high. So we double click and we raise that up there and say, does that make any sense? Was that significant? And the answer is it sure was. It came up and hit it and pulled back. And then it jumped back up and tried and can't do it and comes crashing back down. To where? Back down to our support. But after 4 rotations, guys, patterns 3 to 5 times, 3 to 5 times, and then they break. Is it going to go a 5th time? I don't know. Don't know. If it rallies up, I know where my targets are. There's my lanes on the freeway. But if it breaks down, first level of support is going to be right back here to 164, 163, right here, this area. That's your next support level. If that falls, then you start into a downtrend and you start grasping as you fall down the stairs for anything that you can see that used to be there. And there's something sticking out there and you grab a hold of that. And if that doesn't work, you grab this one. If that doesn't work, boom, you go all the way to the bottom of the stairs. Okay. So there's your patterns, guys, on this one. All right, I'm not looking at indicators right now. I'm just doing the visuals. Good enough? All right, next one. We'll go to Apple. Now we've looked at Apple once before, fairly recently, and I'm going to answer Charles' question so I don't completely forget. Charles, the question: can you do this on short-term trading and day trading, things like that? You absolutely can. If the pattern's there, you trade it, Charles. So if what I'm saying, and yes, does that interaction of the ABC D traders happen in day trading and index trading? Yes, it does. It does. Okay. But like anything else, you have to find it, right? You have to find the pattern. If you see it, trade it. If you can see the pattern, trade it. All right, guys, real quick on Apple. I just noticed that we're out of time. I hate how fast this goes in this because this is my funnest thing to do. Absolutely funnest thing to do. Okay, we have good support for Apple down here in the mid 60s, mid 160s right here. Been here before multiple times. Recently, we just tried to do a breakout. You had a 1 day and then it slipped all the way back in here yesterday. I don't know what it's doing right now. I'd have to look it up. But the bottom line is we've got a nice cushion down here from between 168 down to about 166. You got a nice little pocket for it to land on. All right. Is that going to hold? And the answer is, I don't know. I don't know. Let's look back and see. If it doesn't, come to Papa. If that doesn't hold for Apple, where do we go? And if you follow the horizontal line on my cursor, there's our support line right there. There's quite a bit of action. I'm going to go back a little bit farther. Okay. A little bit of action on the way up, but nothing that stands out because it's just a little bit of hesitation in there, but it mostly was a nice long march. So there's really, for Apple, this is not a terrifically strong platform. It's not bad. It's not, if it loses, it's what I'm saying. I don't see a good support level for Apple until it comes all the way down here to 145, because historically that's the next price support that has any teeth to it. And then below that, you got to go all the way down to 124. Okay. Could you pick up something in here, 36? Yeah. But if they're going to go that far, there'll be a strong push to go all the way to 125. So you got 45 and 25, and we're up at 65-ish up here. So what, 20-point drops on Apple on the way down? If it manages to come out of this compression, this wedge here, the upside is going to be marked by, bring this down again. There we go. The upside is going to be marked by 178. A lot of chatter right here between 178 and about 183. All these bottoms and that top, this would be a real strong area to get stuck in. Okay, I'll highlight this for you. I realize we're over, but just humor me just a little bit. Right there, real strong upside resistance. Then you'd climb on up to 190, and then you're going to push back up to the 198 to 200 range. Market stocks like big numbers. 200 is a nice big round number. It'll draw to it for sure. But there you go. There you go. We had MS. Hope somebody's not going to shoot me, but let's just take a look at this. MS, have we been here before? Yep. All-time highs. Look at the cursor. Look at all these tops. You're at a major resistance level right here at 95. You come up and you've got 100, which makes sense. Nice round number. And then you got a lot of action up here at 106. Not sure why, but there's a lot of price action at 106. So if we jump into a daily chart and we pull back on this a little bit and give it a little bit of head space right there. All right, watch the cursor. Resistance, big resistance from 95, 94, 94, 95 right in here. And then it's Katie bar the door, it's up to 100. Okay. On the downside, you just came off of this strong bounce of 88, which there's a lot of price action at 88. It take a shot out of there for 2 days. If it doesn't work, it's going to tend to come back to that. If we go back and try to do a macro on this, let's do it with a trend line. Okay, there's our macro. Click on here, go up to the first rotation. Go to the second rotation. Oh yeah. Now this anomaly here is legit. If this thing blows wide open, you would watch that line up there as an upside target. But I would think that you're going to run into and follow this 95, 95, 96, and then up to 100. Those will be the next significant price points on any push to the upside. But keep in mind, this is a old trend. This is, and it's got an abnormal surge in it, and then a lot of tiredness and collecting. So it's trying to reignite this. If it can't, there'll be lots of opportunity to take some profits. Okay, and it probably would have no problem doing that. NVIDIA, all I'm going to say about this, guys, is watch the wedge. Watch the wedge. Are we having a breakout of that wedge? Maybe. But watch this wedge pattern. There's a lot going on with this. This is just the short term. Okay, this is part of the big picture coming up here, but you've got this compression. Oops, I want to hit this button, wrong button. Okay, we had this compression on this wedge, and there's back to this gap which filled. This would be your support level. Upside, this is an all-time high. So I would push back here and say, okay, what's the angle of attack on this last run up? And I'm going to change this angle here a little bit. You go back to the starting point of this surge. I'm going to bring it down to the retracement, the low. I'm going to lay this up first on the first set of rotations here. Downside left, right there. And again, are we seeing lanes on the freeway? Starting to look like it. Starting to look like it. I'd have to work on this a little bit more, but right now I would think that this center line is your driving, that'd be the center of your regression right through there. All right, guys, take care. God bless. Have yourself a wonderful day. Sorry we went over a little bit, but I didn't want to leave everybody hanging. Have fun. I hope you did. Take care. God bless. Bye.